Hey everyone, today's video I want to talk about the 3 Canadian stocks that I would buy if the stock market crashes. Now I know I don't like talking about the stock market crashing because, well, you just never know when it happens. But it is guaranteed to happen. So earlier this year, we went through a correction. All the tech stocks got hammered, the higher growth stocks got killed. And well, this could actually start getting into our very boring value stocks, the dividend stocks in Canada. So let's talk about that today. Let's talk about the stocks that I would for sure buy if the stock market crashed. Hey everyone, this is Tracy here. Just in case you don't know me, I'm a former engineer turned a full-time investor managing a multi-million-dollar investment portfolio in Canada. If you are looking to build multiple streams of income, build more wealth, and ultimately live your best life, then you definitely want to hit that subscribe button and that bell notification button to get the latest and greatest videos coming to you every single week. Plus, it's free. So let's get back to the video. Now, before I jump into the 3 Canadian stocks I would absolutely buy in a stock market crash, let's give you a brief history of the stock market cycles. So looking at the past performance of many decades of the stock market cycle, I'm going to just give you some brief rules of thumbs. Now, these rules of thumbs don't always work out, but this is just the average. So every single year, you can expect a 10% correction in the stock market. Every other year, you can expect a 15% correction. And every 4 years, you can expect more than 20% correction every 4 years. And I think when it gets to 20% or more, that's considered actually a bear market. Now, the good news is that there's been way more bull markets than bear markets. And the other cool thing to see is that actually bear markets are getting faster and faster to turn around. So typically they would have ranged, say in the tech bubble, it would last many years for these tech stocks because back then it was a huge bubble. These tech stocks weren't making any money. But then when you look at the financial crisis, the bear market lasted for a bit over a year and a half. And then when you looked at the COVID crash, it lasted like 1 month. So not saying that this is going to predict all the future market crashes that will just be like months, but I would say that just given the pattern that's unfolded in the past decades, it seems to me definitely the bear markets are getting faster to recover. So that's one cool thing. And bear markets, corrections, crashes are the biggest opportunities. You just don't know when it's going to happen, but it is guaranteed to happen. Now, if you're planning for a market correction, market pullback, or market crash, then you might want to take a closer look at these 3 Canadian stocks that I absolutely buy if the market changed. And I have full disclosure, I am not a financial advisor. I'm just some Canadian YouTuber that loves talking about stocks and real estate in Canada. So please take this video as entertainment purposes only. Now, the first stock that I would look at is, well, TD Bank, which is one of the top 5 banks in Canada. In fact, you could really look at the top 5 banks in Canada. You can't go wrong with any of the top 5 banks. But I like TD Bank because I already own a position in TD Bank and it's one of the top holdings in my stock portfolio. But I don't mind adding even more because they have really great performance. Now, one thing I really like about being in the bank sector, like TD Bank, is that because inflation is rising and the way to reduce inflation is actually, well, pumping up the interest rates, and Bank of Canada already says that they're going to raise interest rates for many times over the next 2 years, then we're looking at a rising interest rates, which means then at a rising interest rates, the Bank of Canada lends money to the banks and the banks lend money to the Bank of Canada. I don't know the whole kind of mechanics of it, but if they raise interest rates, the banks also have to raise interest rates. And then with rising interest rates, they will charge, well, higher interest rates for your mortgages, for lending instruments, for basically anything you can think of. And what that means, it's going to pass, and anything that they can make more money, they pass the cost to their clients. So I could see TD Bank doing really well over time in a high inflationary period, which is one of the top stocks that I would buy in a stock market crash. Now, the second stock I would look at is a defensive stock like Fortis. Fortis is already one of my top holdings in my stock portfolio. It's a boring utility company. They do gas and electric, primarily electric. And what I really like about this company is that they have a net zero target by 2050, which means zero emissions, net zero target. They're also spending a lot of money building more assets in clean energy. So if you are very bullish on the electrical vehicle trend, where we're going to move away from, the gas and fuel type of transportation and moving over to electricity, and then using sustainable energy sources like solar and wind to actually get more electricity, then maybe Fortis might be a great company for you to look at. And this great company is a dividend aristocrat. They've been growing their dividends for many, many years. They've been paying their dividends for many, many years, I think over 50 years. And they're also projecting to at least have a 6% compounding annual growth rate in their dividends. So they're going to grow their dividends by 6% every single year up until 2025. So there's just so many things I like about Fortis, which is why this would be the second stock I would buy in a stock market crash. So the third stock I would look at is Lululemon. Now I know this is not a company that's traded in the Canadian stock market, but it is a Canadian company, and Lululemon has done so well in Canada and United States, and well, they're growing internationally really aggressively in China. Now, I'm really excited about them because in Analyst Day, which was on April 20th, they released a new plan, which is really, really awesome. They're looking to double their revenue by 2026. Now, I know some of you are probably thinking like, just because they are putting this roadmap of doubling the revenue doesn't mean they're actually going to achieve it, which, yeah, of course, they may not achieve it. But in the last 5 years, they actually hit their last growth plan, which was 2xing their revenue and doubling their men's growth and all that. So they definitely executed amazingly. So because their management's really strong, they got really stable profit margins, they've been growing their revenue every single year for many, many different years. And of course, they've done well in the US and Canadian market. I actually kind of expect that in the Chinese market. So, which is doubling their revenue by 2026, which is actually really, really growing their revenue internationally, and looking to quadruple their international businesses, and again, doubling their men's business line and e-commerce. So for me, I'm really bullish on Lululemon. And if the stock market crashes or hits a big correction, Lululemon drops a lot, then definitely I'll be adding more Lululemon to my stock portfolio. Hey everyone, if you're planning for a stock market correction or crash or pullback, what Canadian stocks would you add? Let me know in the comments below. I read every comment. Anyways, I hope you found this video super helpful. All I ask of you is give me a thumbs up, and I'll see you in the next video. Bye.